Welcome to DWS Market Update. Over the past few years, there has been much talk about US exceptionalism. This refers to the perception of the United States being in a special position, fostered, for example, by the fact that the US growth hardly slowed at all despite rate hikes of more than 5 percentage points. In fact, the US economy grew by almost 3% in both 2023 and 2024, while other industrialized countries were struggling, recording some negative quarterly growth rates or were even on the brink of recession. However, a closer look at the strong US growth rates of the last 2 years reveals that there were two supporting factors. On the one hand, fiscal policy remained expansionary. This was, of course, good news from a growth perspective, but it came with side effects, like a budget deficit of nearly 7% of GDP. The second supporting factor was immigration, which also boosted growth. We expect economic tailwinds from both fiscal policy and immigration to weaken significantly. As a result, US growth is likely to be much less robust going forward. In addition, there are the recently introduced tariffs, which are likely to lead to rising inflation rates over the coming months. In Europe, on the other hand, inflation rates are falling, and growth looks set to accelerate, which is partly due to fiscal policy becoming more expansionary. Especially for Germany, we expect rising government spending on infrastructure and defense. In addition, the savings rate of private households in the Eurozone is significantly above the average of the last decade, while that of US households is below it. All in all, we expect the European economy to grow slightly faster than the US economy next year. This has led to an outperformance of European stock markets, for example, and to a strengthening of the euro against the dollar. We expect this trend to continue, particularly with regard to exchange rates. That's it for today. Thanks for watching and goodbye.